Good morning, ladies and gentlemen, and welcome to the show. Listen, I'm glad to have you guys here. Today is uh, today is January the 16th, 2020. It's a Thursday. And welcome to the show. Listen, let's get the chart started right here and take a look at what's going on. There's a mysterious illness out there, in China. And it all started in a seafood market. The seafood market is called the Hunan Seafood Wholesale Market. And the people are catching this virus now, and they don't really know what the cause is. And what they're saying here is human-to-human infection cannot be ruled out, according to the Chinese officials. And they just don't know. It's a coronavirus. And a 61-year-old man died of the disease on Saturday. And do you remember coronaviruses? They're like SARS sort of thing. It's a SARS-like virus. It attacks your lungs, evidently. It sickened dozens of people in Hunan, China. And now it's made its way into Japan. From a Chinese national traveling from the eastern Chinese city to his home in Kangwon Prefecture in Japan, according to the Japanese Times. The man is in his 30s. He returned from Hunan on January 6th and was hospitalized 4 days later, where he has recovered and was discharged on Wednesday, according to the hospital official. It says on Monday, the World Health Organization announced that the new coronavirus with SARS-like pneumonia symptoms has struck a woman traveling from China to Thailand. So evidently, it's spreading around. And they're not sure. They don't know. There's so much they don't know about this yet. So we're going to keep our eye on this developing story of this new virus. And maybe it's coming from seafood. I don't know, because it all started in this seafood market, the Hunan Seafood Wholesale Market. So we don't know if it's coming from the fish, or it's coming from seafood, or where, or just what and how, Well, they're going to learn. They'll learn. They're going to study it. As I'm sure they got it under microscopes right now, and they're taking a look at it. Evidently, this is what it looks like. Those two little arrows, globules of it. Anyway, let's move on to the markets and take a look at what's going on today in the markets. What we have today is silver price of $17.90. It's down 6 cents on the day so far. I'll tell you what about gold and silver. Gold and silver both. Not just gold, but gold and silver. They're the two things that are going to keep up with inflation. They've been keeping up with inflation since Roman times. But also at the same time, they're probably going to actually move ahead of it. Once the inflation really starts to come, they're probably going to start to do more than even keep up with it. They're probably actually going to move ahead of it, because they've been suppressed for so long, especially silver. Silver's been the most suppressed. And the silver to gold ratio shows this suppression of silver. The silver to gold ratio is not where it should be. When they mine it out of the ground, like maybe it varies depending on mines to mines, depending on what mine you're talking about. It varies in the Earth's surface, anywhere from maybe 6-to-1 to maybe 20-to-1, But the gold to silver ratio is not following the mining ratio. The gold to silver ratio is way out of whack. It's like 80-to-1, or 86-to-1 or something like that. I haven't kept track of it exactly what it is today, but it's way out of whack what it should be. It should be more like 30-to-1, or something like that. But that means that silver would move against gold twice as much, go up twice as much as gold even. So silver is fantastic because it's been suppressed for so long. Let's take a look at gold today. $15.50 right on the mark. It's down $5.30 today. Why it should be down, I don't know. I mean, really, considering what's going on with the money printing and everything, but there you go. Let's take a look at cryptocurrency today. You know, cryptocurrency's taken a big leap in price. It went up. Went up a lot recently, but now it's stalled. It's stalled. It's been stalled for the last, I don't know, 18 hours or so. At a new higher price, it's stalled. It's at $236.6 billion with a Bitcoin dominance of 66.6%. And now, right now, it's moving along sideways. We're waiting to see if it takes another leg up or if it takes a leg down. Because cryptocurrency doesn't go sideways real well. You know? It's not good at that. It's always had a lot of volatility. It either moves up or moves down. So we're waiting to see which way it's going to go. My tendency is to think that it's going to come back down a little bit, you know. In the very short term, though. We're talking short term here on price coming down. Because I think that there's going to be a huge price moves to the upside, but they're further out in the future. How far out in the future? That's what we'd all want to know, me included. How far out before it starts to go into a rally again? That's what we all want to know. You know? How far out is that rally? Anyway, moving on today to the Dow Jones Industrial Average. And, you know, this is just getting boring. Day after day, up, up, up. Every day I come on here, up, up, up. It's up 149 points on the day so far. It's cracked 29,000. 29,179. And it's up on this trade deal between China and the United States. That's why it's up. I don't really see this as really a deal. Myself, this is only my personal opinion, but I just see this it's more like a truce than a deal. It's called a first stage deal, you know, I guess, from what I gather, you know, but anyway, the Dow's up. I mean, it would almost it goes up on good news, it goes up on bad news, it just goes up lately, you know, but what goes up must come down. Always remember, what goes up must come down. This thing is in a hyper bubble right now. Talk about tulip mania, you know. Let's take a look now at the crude oil. $58.16. It's down, it's up 35 cents on the day. Just over half a point. 0.61, it's up a percentage of a point. 58.16 for crude, but it's still below 60. And you remember what happened in the Gulf there a while ago, you know, when the tensions grew. Oil went all the way up to $63, you know, so it's $5 cheaper right now than it was then. It's went down from its peak. Well, you know, if we go to, let me see if I can get the 1 month chart. Yeah, here's the peak right here. The peak was on January 7th with a price of $64.70. And since then we fell back off down to about $58.16. Let's check U.S. Treasuries now. I don't really like this U.S. Treasury chart they have now. They've made the font too small. You know, and it's a little bit hard to see it because the font is so small. But here we are in U.S. Treasuries, and we're looking at rising yields out to the long end of the yield curve. Yesterday, it's marching up and down. One day it goes up, the next day it comes back down again. And so what we're looking at today is rising yields on the long end of the yield curve, about 2 basis points. 2.3 basis points in the U.S. 10-year. U.S. 10 years at 1.81. U.S. 30 years at 2.26. You know, and if we move to the shorter end of the yield curve, the 1 year is at 1.55. So that's our Treasury market today. Let's take a look at the U.S. dollar index. The U.S. dollar's going up a little bit today at 97.26. Doesn't surprise me that the U.S. dollar stays strong. Going along with the milkshake theory, you know. And milkshake theory is partially, in my estimation of it, now this is just my opinion only, I think it's partially correct, but only partially correct to a certain point, that the dollar is the best of the fiat currencies, and they're going to stay within this fiat monetary system as long as they can until they're forced out of it. Because it is a Ponzi scheme, ultimately, in the end. And that force out, when they get forced out, start to get forced out, it's going to be a panic force out of the dollar and all of the other fiat currencies. They're going to all start looking for safe haven assets that are not connected to the fiat currencies, because they'll all see, when they all start to see that the fiat currencies are losing value. See, right now, it's one of those periods in time where these alternative assets are not trusted a lot. They actually, if you can actually believe this and get your head around it, start to understand it, that they actually trust in fiat. And they have for a very long time. And this is what they've adapted themselves to, is this trust in fiat. This is what they're used to. This is what they like, is trust in fiat. And it's hard to break them from that. But even the fact that fiat is actually a giant Ponzi scheme, it's like at a certain point, it's going to be a mass consensus. It's going to be a realization that fiat's a Ponzi scheme, and then they're all going to try to rush out. When that day comes, and that day is approaching, every day we move forward in time, we're moving one day closer to when that day is going to hit. The masses, fiat is not. Now, a lot of early people out there have realized this years ago. They've used their logic and they've processed this in their mind, and they've realized, hey, you know what? Fiat is going down. Mathematically, it cannot continue this way. And they come to that realization. They're trying to hedge against it way off early. Years ago, they were trying to hedge against it. And now they're prepared, those people. But the vast majority of people out there put their trust in fiat. And that's a misplaced trust. Anyway, listen, thank you guys for listening to this market report. Like and subscribe. And give me a thumbs up. And we'll catch you guys in the very next show. Bye-bye, guys.